Kevin and Derek here from Kostoff and Company at Nova Home Loans.
Spring has sprung, and that means the real estate market is in full swing. We don't have to tell you that means increased activity for both buyers and sellers preparing to move over the summer months. If you're considering a move, first reach out to us for a pre-approval and then get that process started today. Increased activity also brings increased competition. Make sure you are positioned and prepared to make the best offer you can. Let us help you get your offer accepted.
Many of you have called, emailed with questions regarding current conditions of the Denver housing market as well as what we see in the future. Well, we don't have a very good crystal ball, unfortunately.
The cleaning people knocked it off the desk and broke it.
That's right. We can tell you what's happening right now and provide you with some historical statistics in an effort to provide you with projections and future trends. So let's start with housing prices and interest rates. As you may have guessed, both continue to increase. The most recent statistics for Colorado show an average of 8% property value increase over last year. It's fantastic. This may seem scary to some folks, maybe thinking that we're headed for a bubble. Don't panic. Historically, Colorado sees about a 5% increase annually on property values, and that's been over the past 100 years. So the extra 3% is nothing to freak out about.
Interest rates are also on the rise. The cause of rates increasing are twofold. First, our economy, when it's doing well, rates increase to ward off inflation.
Okay.
Most of you will agree with the economy is definitely on the move upward.
No doubt.
The second cause is due to quantitative easing.
That's a big
50-cent word right there. This is a fancy term for our government cutting back on the amount of mortgage-backed securities they're purchasing. The government has been reducing their purchases over the past 3 years and will continue to do so for the foreseeable future. This pushes secondary markets like mutual funds and hedge funds to purchase more of these securities. Well, like you and me in our 401k, they want higher returns. So raising these rates makes those securities more attractive. Keep in mind, these rates are still in the mid to high fours, so while not historically low, like you might hear in a radio ad,
all day long,
they still are great compared to what we offered in the 80s and the 90s.
So inventory continues to be challenging, but appears to be improving over the past month and a half. As we move closer to the summer months, we expect to have more properties on the market as families position themselves to move prior to the new school year. Competition is still strong, but don't let a little competition keep you from becoming a homeowner or moving into your dream home. One thing moving faster than the purchase market is the rental market. The rental market is still at 97% capacity, and costs of the consumer are rising as well. Don't pay someone else's mortgage when you can purchase your own home and begin filling your retirement nest egg with an 8% annual equity.
Rent payments are pretty traditionally much higher than mortgage payments, so give us a call. In the end, your home is the best source for building your wealth. Call us today to discuss how you can become a homeowner. Thanks for tuning in. We'll continue to update you with market conditions throughout the summer months to ensure you are in the best possible position for your home buying experience.
Talk to you next week.